Hey everyone, Gary McGowan here, and today we're going to talk about the trigger rate. Is this something that you need to know? If you have a variable rate mortgage, you definitely need to know what a trigger rate is in Canada. So today we're going to do something a little bit different, but kind of the same. And let's get into it right after the intro. That's right, the trigger rate, my friends. What is it? Well, we're going to talk about it, and we're going to make sure that you're well educated going into the fall months, as the Bank of Canada has talked about adjusting what our current interest rate is. And perhaps we're getting another rate hike on September 7th, maybe another one towards the middle of fall. And who knows what's going to happen to our mortgage rates. However, this is what you need to know. If you've got a variable rate mortgage, you need to understand what a trigger rate is. So without any further ado, let's watch out for the Dancing Gare. Yeah, that's my contact information there. Reach out to me. Many have. And as we go through this, if you need to get in touch with a mortgage broker, please reach out to me. I work with a few great investment mortgage brokers. Also, if you're looking to refinance or get a good comprehension of what your current wording is in your mortgage documents right now, you don't understand what that trigger rate is, reach out to me. I'll forward you to the right mortgage broker in the area. Good stuff. Okay. Trigger rate. Well, if you're on a variable rate mortgage, so if you took a mortgage out a couple of years ago, most people were taking variable rate because the rates were so low. Now, as we're seeing, rates are creeping up. And what is that going to do to your payments? And what is that going to do to the balance of your mortgage? Well, there's two variable rates out there. So you got your variable rate mortgage, and you've also got your adjusted rate mortgage. And most people that are on the adjusted rate, I should say all people that are on the adjusted rate, what that means is as the interest rate increases or fluctuates during the term of your mortgage, so does your payment. And a lot of people are okay with that, right? So if the interest rate goes up, say 0.25% or a whole basis point, so does your payment. And that's good. That's okay, because you don't need to worry about what a trigger rate is. However, if you're on a variable rate mortgage and paying the same monthly payment every month, what happens is as interest rates go up, the less and less principal pay down you're paying. So I'm going to spend the next little minute. I'm going to draw it out for you because I'm visual. I need to write it down. This is what it means. So let me just share my little iPad screen here. Yeah, there it is. Let's just keep things real simple. Let's say you have a payment every month of $2,000. That's your payment every month. And part of that is going to interest and the other part is going to principal, right? Makes sense? Well, to keep things simple, let's say your your interest payment is $1,500 and every month $500 is going to principal pay down. It's a good thing, right? Happy there. I'm keeping this real simple, easy math, because that's how I do things. Now, every time there's a rate adjustment or that rate increases, your payment up here, the $2,000 doesn't change, but what does change if the interest rate goes up is your interest payment. So maybe now it's at $1,700, and that means the principal that you're paying down, of course, you can do the math with me, is now $300. Now, what happens if that rate goes above your payment? That's your trigger payment. So for instance, if all of a sudden the interest rate goes up again, and now the payment that you have to pay every month just to carry your home, to borrow money, to have that bank's money, perhaps that goes over $2,000. Then what happens? Right now, you're making zero payment to your principal. And if it goes even higher than that, what happens? That's your trigger. That's the trigger rate. So what typically happens is you're going to get a letter from your lender to say, hey, you got to do a couple of things here. One of two things typically. Make a lump sum to catch up, or, of course, adjust your payment. Increase that $2,000 payment. And perhaps for some of you, that's out of the question. You can't do that. The other opportunity here is perhaps there's the third opportunity is talk to the bank. Maybe you can get locked in for a set rate. Now you're also going to have to pay a slightly different interest rate because typically Typically, variable rate mortgages are cheaper than fixed rate mortgages, but have the conversation with the bank. Don't get caught off guard. So let's look at some of the rates right now. This is right off of Rate Hub, and this is the best big bank rates in Canada as of August 22nd, 2022. And you can see the first column is your 5-year variable rate mortgage. And then the next column is your 5-year fix. And then third is your 3-year fix. So that's kind of the rates that we're looking at right now if you've not been up to speed with what's going on. So anywhere from 4.24 to 4.3% on a variable rate. 5-year fix, you're at 5.25%, a little bit less than that. Perhaps if you're working with a great mortgage broker, they can get it cheaper for you. But here's what you need to know. Rates most likely are going up again on September 7th. I predict we're going to see about probably 2.5 of a bump. And that's kind of where I see it. They had a big whole 1% bump back in July. And I kind of see that about, 0.25% basis points, I should say. So that's where I see things going. Understand what that trigger rate is for you. Don't get freaked out. Be educated, right? That's what this information, or that's what this video is all about. Reach out to me, look out for the Dancing Gare. If you have a variable rate mortgage and that payment is fixed every month, know that this is something that could be happening to you. So reach out to me. I'm happy to point you in the right direction to talk to the right mortgage broker. I'll see everybody on the next video, and bye for now.